now tuned into the Money Level Show.
Hey everyone, welcome back to the show. We are back with Thomas George of Grizzle. What's up, man? How you doing?
What's happening, man? How are things, man?
Man, the market's been bleeding out. It's like been on the stretcher bleeding out. I think it's I don't know if it's on the ambulance headed to the emergency room. And then it may have to sit in the emergency room next to some crackheads or whoever else right next to it, coming in at 3 a.m. in the morning, and then they're overstaffed and everything. So, when is the market going to get some type of relief? It's just terrible right now.
It's been exhausting, and it's kind of like I always think about it. It's like the person like I got an ache, I got a this, like so the doctor stops caring after a while, right? They're like, get out of here. And then when you actually have something wrong with you, you're like, get, and so, the problem right now is that, we visited the doctor, the ER room a few too many times this year, right? And so that's just kind of it's created a bit of a situation, right? And so, the market's at its core being is it's a reflective state, right? It tells the world, whether things are good, bad, and when vol is higher, when things are messier, people don't want to pay the same price for the same amount of earnings, which is basically applying a higher discount rate, or said another way, you're slapping a lower PE on the stock market. And I think, that kind of multiple visits to the ER room, it doesn't really be like, oh, I'll pay the same price I'll pay, I paid 2 weeks ago. You're like, I don't know how many more visits you have. So, you know what I mean? I got to take a little discount here. And I think, and we were talking about it, I think it's still a big positive, net positive for those who are buyers of quality assets, because it creates opportunities, right? Like that's when if you didn't have positions in commodities, if you didn't, this is the opportunity to step in, right? If you missed out on Nvidia earlier on, like these resets that's when you kind of get back in. The funny thing is, like, a lot of people who missed out on those things, when it comes time to buy, they're like, no, like I said, right? And it's just like, it perpetuates that thing. But that's where it really has created a lot of opportunity, said simply.
Yeah, yeah. So how much work is this creating for you all that interact with Wall Street or, investments? I mean, the talk of tariffs, the back off of the talk of tariffs, there's so many macro dynamics that's impacting the markets and stuff. And how much work is this creating for you all? Like, are y'all just like the long term? I mean, I imagine like traders, or if you're a good trader, you're able to make a lot of money during this time. But I mean, for investors, it's like, yeah, it seems like it's a roller coaster ride.
Yeah, so I'd almost say it's like the flip way, in the sense that, like, this is the time you want to, like, this is the time when traders get like kind of get like really chopped up, because it's one thing, like, you're talking about a tweet that could derail your like midday trade, right? So it's like, how do you plan for that? There's no, like, there's no game plan, and that to me feels like there's a lot of flying objects that can throw off your daily trade plan. But for investors, I think that it gets more interesting, coming back to that point. Yeah, it's a nuisance. Let's be frank, it's a total nuisance. Like we were talking, it feels like 1 month of a Trump term feels like 1 year of, like, any other. It's a lot of work, because you're just like, okay, what's happening here. But I think at the core of it, the way we think about the world is actually quite aligned nicely with whether Trump's, whatever's happening on the tariff side. Commodities are clearly, like, gold's winning, right? You've got a real that's real. The commodity complex is doing extremely well, and right now, tech, the fundamentals of AI, which we've been huge proponents of, had never been stronger, right? Look, like, ChatGPT had that. I don't even know how to even say the glib. I don't even know how you would pronounce it, right? But that whole, like, everyone turning into a cartoon face, like that literally shut, like they didn't have enough juice in their servers, right? And if that's a flow through for you, we were just scratching the surface here, right? This, really speaks to the upside in compute and in Nvidia. So, but the bottom line is that yes, it creates havoc and perceived headaches, but I think for investors with a long enough time horizon, it allows you to get back into those names that that you wanted to, but you wanted a cheap price. Whatever it is, it's an opportunity.
Hmm. Yeah, for sure. So you're saying that the AI trade isn't over? Like, is it? Where do you think we're at with the AI trade?
Oh, geez, I so far from over, right? We're just still scratching the surface. We, what we're the way it's going to impact industries, like industries, not an industry, right? It's across the board. There was a great study that was done. Basically it was like probably the most comprehensive study of giving a worker AI, and it was like a big corporation. I forget the name, but the study was really profound, right? So it was like, okay, I'm going to give you a task, and I'm going to give this other dude a task, but I'm going to give him AI, and then I'm going to give that same task to two more regular people, right? And so they're like, well, how did everyone perform at these tasks? And so the person who had AI performed better than the two-person team, which is kind of like, if you think about it from a productivity boost, that's just massive, right? And also, there's a little note here. They were also happier, which is like kind of crazy. Like, it's like, it just goes to show you how many people hate their coworkers. I'll be honest. At these big corporations, but that was the first real study to highlight how productivity is, everyone's talking about it, but true impact, and those who use any one of the LLM models will say nothing but glowing things, right? It's just, and those who haven't, which end up being a lot of the bears. I just struggle. I'm like, have you even used? Yeah, have you even used AI? Right? It's profound stuff.
Yeah. It's definitely something that's been helpful for me because there's so much I'm trying to learn right now. And when I learned that you could upload a PDF, to a Chat GPT or any other AI platform and tell them to give you like the cliff notes, like, hey, give me the main points out of this freaking 47 70 page, 100-page document. Like, I do not have the brain capacity to read this. And then it just spits out like summarizing it, and I'm just like, okay, yeah, this saved me hours.
Totally, and like that your now capacity to take in more information, has been multiplied significantly, right? And so like I Perplexity. I'm not sure if are you a user of Perplexity?
No, I haven't used it.
Yeah, you should try it. So for me, like I found that, now probably half of my, uh, we search so many things every day on Google, right? So half of my now searches are on Perplexity. And I find the quality of the output just so much better. Like, so, just even there, you're just seeing a real, like, you're just getting far better answers from this AI tool, right? And it's continually learning. It's just, we've yet to still scratch, where robotics is going. Every time I look, these robots are dancing better and faster in China, and American robots is still, what I mean? I'm like, what's happening over there?
they still doing the '70s robot dance. It was
That's
like,
exactly right. I'm like, why are our robots doing that? Like, it's very fluid stuff. I'm like, this is kind of crazy. And people will say, there's a lot of theatrics. Who knows? But the bottom line is, uh, we are truly in the era of China being a huge competitor in every vertical that matters, right? And I think that's something as investors we really have to take into account, right? And if you think about the core of Trump too, right? Like tariffs and bigger picture, right? At the core of it, there's a logic, right? In the sense that if you were to allow these, by all accounts, very good Chinese EV vehicles into America, there's no question, a consumers would be wowed and thrilled, like just like as they were with Tesla, but more importantly, they would have, they would be very cheap, and like, so that kind of, big picture, I was talking to a buddy about it yesterday. It's like we're going to see a duality, a world, right, where developed markets will work very hard to put up barriers against China, particularly China, right? Against China from infiltrating and taking away these old industries, like automaking is the most, the one that everyone kind of can see and feel, right? And then when you think about the world outside of the developed markets, call that EU, US. So the world outside is emerging markets, except for India, right? Because and like, but even then, BYD is looking to set up a plant in EV plant in India. So like, even that's becoming very interesting. But if you think about, if I were to go to Ecuador, there's a high probability that I'd be driving in a Chinese car, right? That's the kind of world we're in, right? Versus if I'm in America, I'm never going to see a Chinese car. So it's going to be quite interesting that, if you were to fast forward out 10, 20 years. But I think more importantly is just where technology is going and how quickly they're pushing on that whole EV route. And I think there's a lot of interest in terms of opportunities there. The big PDAC mining conference was here in Toronto. We had a chance to speak to Rob Weir. He's VP Corp Development at Lithium Royalty Corp, and they've got all these different royalty assets in lithium. But if you were a value commodity player, you're like, man, lithium is looking pretty choice right now in terms of where it sits. Like, it's not hitting 52-week highs, right? It's very far from. I like to go shopping for deals on the periodic table, right? I like to look at the periodic table and see what's out of favor. Sometimes it could take a little time to come back, but that works, right? Like nat gas, we've been structurally bullish, and that trade has absolutely worked. Did you have to wait a little bit? Yeah, but nat gas stocks did really well last year. They're doing really well this year. I just think and we've been bullish on gold, bullish on copper. That stuff. It was like people were obviously more enamored with tech. Now in our ETF we barbell that commodity exposure with AI tech, and I think that's how all investors with a time horizon greater than 20 years should be positioned, because that's exciting. Like that's where the future is. No one's gonna disrupt copper. You need that shit. It's like no one's going to disrupt natural gas. Like those are foundational elements. Belong those things.
Yeah, definitely. I agree. So with I'm looking at Grizzle's ETF holdings, and so Nvidia still remains the top pick. So what about Nvidia makes it so compelling to make that the heaviest weighting out of the ETF?
Yeah, so Nvidia for us is like, no question, it's the name. It's like, it's the it's the sun, right? It's all the planets of AI rotate around Nvidia because it's powering this entire ecosystem, and there is not a competitor that we believe is close, and it wouldn't be close for the next 4 to 5 years even, right? And again, we're something we're always evaluating, but the core of AI is compute. It is the ability to power up these LLMs. So the way we think about it is these large language models, these AI models, that is what's getting commoditized. And we saw that with DeepSeek, right? As soon as DeepSeek hit, you're like, wait a minute. I was on it, as soon as like I was logged in and using it, and then they hit rate limits or whatever. But like the core of that model is not terribly differentiated from best in class ChatGPT, like, it's a good, so the way we think about it is you can either compete on that side, or you can own on the semiconductor side, and Nvidia is clearly best of breed. So for us, all things have to revolve around that. So for us, it's a straightforward play that makes a ton of sense. If you are a futuristic investor investing in disruption, Nvidia has to be one of your core plays. It just has to.
Hmm. Got it. And so why not like a company like AMD? So AMD been getting just murdered off of the highs. I had started investing in AMD when it was $10. I didn't have enough foresight to see how much that was going to increase, so I didn't hold it. But now seeing, it went up to 200 something dollars. Now it's at $100. So why not like something like an AMD?
Yeah, so that really comes just down to the technology, right? And the fact that NVIDIA is just a far superior chip. The play for AMD is that you're of the view that there's a technological breakthrough that AMD can usher that can catch up with NVIDIA. That we just don't have the clarity that they just haven't been able to do that to date, and it doesn't look like that's within the near future of an outcome. So for us, maybe there's the right price to pay for that optionality. But for us, we don't own it because the price is wrong too. Like, you know what I mean? So because so many people are like, well, I missed the core play, or I have this view that I can find the value play. Value plays in core technology are traps generally. And it's one thing if they're cheap, but then when everyone else is bidding it up, it's just like, there's not a lot to play for, and you're betting on everything working. So, for us, NVIDIA is the clearest play there. And, just trying to play, the view of a catch-up technology trade, especially NVIDIA's use case, no. You bet on the thoroughbred.
Yeah, for sure, for sure. So gold has been rising significantly. The price of physical gold, the miners have bounced off the lows. How's that looking for you all? The gold Bitcoin slice of your portfolio.
Yeah, so we think it's gold, having that final breakthrough 3K, like it's all looking spades, right? It's looking great. The other side of it is we just haven't had disruption at a geopolitical level globally, right? Trump is bringing that factor into play. And I don't think, I don't think we've seen that for decades, right, of this level, right? And this is the first time investors like, wait a minute, the construct of the world that we once knew, US dollar strong, is not necessarily, what will play out going forward, because, things are just in flux so deeply, right? And so on the margin, people are like, listen, I need diversification. So, that gold has worked tremendously well. We continue to believe the gold miners are significantly undervalued for their ounces in the ground. So that for us it makes a ton of sense. On the Bitcoin side, again, it's a hybrid type security, right? That's the challenge for Bitcoin investors. It has a high correlation to technology. And at the same time, it has a correlation. There is that, store of wealth correlation, right? But in times of volatility and stress, it does take on more of it has taken on more of a characteristic of tech. So bottom line is, we think they complement each other really well. And on the R play vis-a-vis Galaxy Digital, I think it's a smart play. It's more of an ecosystem play. So, like I would own that over MicroStrategy. I think, we were talking earlier about the challenges of debt, right? And a lot of what MicroStrategy has been built on is these converts, right? It's this stack that once you get called, if the wrong pathway happens in Bitcoin prices, equity investors could face a lot of trouble, right? And so the way we construct a portfolio is just like your own household, having low leverage has value. That applies to portfolio as well, right? It just increases the volatility unnecessarily. So, and I still think like Michael Saylor, every time they put him on one of those covers of those magazines, and it's like some sort of the future of digital or some nonsensical title that always marks a local top. Always marks a local top. And again, a lot of financial engineering going on there and stuff. But we're still very bullish that in this environment where potentially we're seeing a sea change of the U.S. dollar as the supreme house currency, if you will, right? And if that gets challenged, things change quickly.
Yeah, yeah. So so I got caught on the hype of Trump when he got elected in terms of like this first time we had a president come speak about Bitcoin, crypto.
Yeah.
And then when he got elected, like the equities just took off. Like, Bitcoin, took off, everything took off. I mean, even MicroStrategy. And so, now we're seeing a different story. Like, I mean, there's been some bullish news in terms of like, okay, the strategic reserve or the crypto strategic reserve and such. And it seems like there's some moves there. I mean, David Sachs coming in and the whole SEC stuff and really trying to clean stuff up. Ripple losing this, or they're them dropping their lawsuit against Ripple. Like, so it seems like there's a lot of bullish news, but that is not driving the prices of cryptocurrencies and Bitcoin higher right now. And so I've been kind of wondering, like, okay, is this because of Doge and liquidity? Like,
Yeah.
when money was just flowing like easily, money would flow into assets, right? And
Yeah.
then
Yeah.
now we're cutting back, spending, we're cutting back jobs, we're cutting jobs, right? And so I was kind of wondering, like, okay, how's this? I'm trying to make sense of those two, because I was in the camp of like, okay, this is gonna go crazy. We're gonna have a massive blow off top, and I'm like, did the top already come? Like,
Right.
where are we at?
Totally. So the biggest challenge with cryptocurrencies, the broad crypto universe, is that they're highly correlated to to the market, right? So it's that as soon as the road bumps hit, I would say they've been derailed more by tariffs than companies actually impacted by tariffs, if you know what I mean, right? Because just the nature of them. So in a lot of ways, again, I think I think the broader view, we're Bitcoin bullish on Bitcoin. We think there's obviously some ecosystem opportunities, but yeah, like I really do believe that the opportunity is that taking a structural view on Bitcoin. I think you come back. There will be a strategic reserve, and we believe that Bitcoin will be the core part of that, right? And it's going to take time, but I think it still makes a lot of sense to have a position, a small position in that sleeve.
hmm Yeah, got it. So yeah, so what are some other things that you're kind of looking at for this year? What are you projecting? Kind of like what do you, I mean, obviously it's hard to like predict,
Yeah.
with Trump. It's hard to predict things, but like what are some things that you're hoping for? Are you thinking that the Fed's going to pivot?
Yeah.
You think what's kind of your take there? Inflation? Uh,
Yeah, like I gotta think that so the biggest issue right now is just you've got a higher risk premium in the market, based on a lot of this Trump tariff volatility. Um, you have to look through that, right? And I think that's therein it lies the near term opportunity that you know there's a limit, a threshold of pain that he will take, right? And you know that a resolution ultimately comes down the road. Um, you know, I think we're pricing in an extreme impact right now. I think any scale of taking that back brings back risk assets. So from our perspective, you know, that's the macro top of the house. You know, I think that you got this window here of buying cheap assets that could re-rate higher, you know, as tariff volatility goes away, right? So that's a clear opportunity. And then secondarily, that still doesn't change, like, you know, the fact that gold, you know, I think gold remains well bid, and the gold miners. We're writing a piece on this, so I'll keep you posted on that. We're writing a piece on the gold miners and what really drives the gold miners, and you know how fundamentally undervalued they are. But you know what names you need to play. Right now, the primary way investors gain exposure to gold miners is through the GDX ETF. And we think that's a very inefficient way to have exposure to gold equities. And you know, we'll walk through why, but cash flow is definitively king. And the GDX ETF doesn't optimize you for that. And I think that's what some of the biggest challenges in the market right now is, that when someone thinks about some sort of theme or whatever, their first thing that they reach to is not necessarily, you know, like, Daryl, you know, tell me, you know, your favorite stock in this sector. Okay, hey, listen, I'm going to buy, like, you know, this ETF that's covering this sector, right? Like, it just kind of has ported a lot of people away from thinking about the underlying stocks and just thinking about like these blocks without really questioning, has that block been created so well, right? We've seen that in uranium. We've written about that in bid ask. Just, you know, these uranium ETFs, the big ones like URA, that they're not necessarily, like, if you are bullish uranium miners, like, you're not getting that leverage and exposure, right? So big picture, you know, we just think gold equities are in a phenomenal place. Many of these mid large cap miners are deeply undervalued. But if you buy the GDX ETF, you're not going to get an exposure to that value. So you ultimately got to start old school looking at stocks again, which is exciting.
Mm-hmm. Yeah, for sure. Yeah, appreciate you coming on and sharing that and everything. So where can people find more about the work you're doing and everything, and get some of your your insights on your takes and everything?
Yeah, for sure. So all our research.grizzle.com. We have a gold piece coming out shortly, actually, next couple of days. So stay tuned for that, because we really think that that's a huge opportunity in the market right now. Check in, the ETF.grizzle.com. You see, so we're managing a disrupted ETF. We believe the barbell is really important, owning commodities plus owning, the future of tech. You don't need to own the mushy middle. That's just unnecessary. Own these two things and you're good. Always on Twitter, always on Twitter, man. So that's, yeah, man. And thank you so much for having me back, man. And it will, hopefully, next year you'll have to come through to Toronto, man, for the mining conference. We had a heck of a party to kick off PDAC. We had like 350 plus people. Like, it was shoulder to shoulder. This was like beer flowing. Like, it was like we had to shut the whole thing. It was like we went right to last call. That was a proper party. Like, people were coming out like saying that there hasn't been a PDAC like that. And so the PDAC mining conference is the largest mining conference in the world. 35,000 plus people come to Toronto.
Yeah, nice.
It's like United Nations, man. You're like, where am I? Peru? Where am I? Africa? Like, you got groups everywhere, right? So it's mining's unique like that. Very different than oil and gas, right? Oil and gas is concentrated in certain regions of the world, but like, you literally have a mine in every corner of the world, and they literally come. It's quite a neat experience.
Yeah, for sure. Yeah, I definitely have to come out to that one. That sounds fun. Well, thank you, Thomas, for coming on the show. I'll be sure to link to those links in the description below, and everybody be sure to go check them out. Thank you, man. Appreciate you.
Thank you.